Alright, stream's gonna be starting soon here. Alrighty, hello everyone. Hope you all had a good night. I got a macro plan video processing. It's gonna be covering some thoughts that I got on the dollar, on risk assets. I got some pretty big forecasts when it comes down to what is it, the tech equities, right? The Nasdaq. That's I don't know why the word evaded me, but I got some views on the Nasdaq coming in here. Hey, Filio, it's nice to see you. I hope you're having a good morning here. So the stream last night is getting turned into a video. It's all done. It's all edited. Like I said, I got real good at doing my my DaVinci Resolve, and now we are ready to go for some charts for this stream. Last stream was just all macro. Now we're going through some charts. I do have one thing to bring, though, and that is some euro dollar analysis. Let's kick this off with the headline. Did I call this, or did I call this? We planned the profit here. And leave a like, subscribe, share this around, because you know what? You know more of this stuff is going to be coming around. Every single day I'm going to try and get more streams, get more highlights out. Oh man, this is going to be great. Hello, Prinsley, nice to see you. You were there during the live stream last night for doing the macro plan. Man, love to see the action in the chat. Ah, oh, you guys are fantastic. Fans are fantastic. Now you can, if you already are familiar with pivot probabilities, you're already looking at this chart and you're going like, no shit, it went there. No duh, it went there. Oh, you bought pound? All right, we'll go over pound in just a moment. So real quick, euro dollar, it's the thing that's popping off right now. Yield spreads are going positive on it. I'm gonna try and pop my pop filter. Let me back away from the microphone a little bit. You notice how I like reframed my camera, put it here in the other corner, so then when we actually go to the yield spread analysis, it doesn't like block this table here in the corner. You can see yield spreads are now positive. Yeah, check this out. So this is research that I got this morning, fresh, hot off the press research. ECB preview, looking beyond next week. You know that's the exact kind of headline I like. I always like looking ahead. Always. I'm always trying to look ahead on my outlooks. I'm never trying to look back. Now, when it comes down to this outlook, this comes from Danske Bank. So, real quick, let's go over this, put this into context, because this is going to give us some insight into why we're even getting this move in the next place. And then after euro dollar, we're going to be going over the pound dollar. Checking out Prinzy's trade, okay? So the ECB, I'm going to start reading this first bullet point here. The ECB meeting next week will be a peculiar one, Danske Bank says, with a risk of no market reaction. And I wonder why they say that. On one hand, the decision has already been well telegraphed. 25 basis point hike, and app reinvestment to end from July 1st. And on the other hand, hand guidance with new staff projections. I think those staff projections are going to be the thing we look forward to the most. At least, personally, me, I'm going to be all over those staff projections. I'm going to be combing through them. Hopefully, if you guys are in the Discord, link to the Discord's in the description. Hop on in. We'll be going through those, doing our plans in the Discord. It's likely going to be one-sided risk for markets. Hawkish tunes from Lagarde, the governor of the ECB, on the back staff projections is at risk of being largely disregarded by markets. So, as hawkish as Lagarde may be, her tone is getting thrown out the window. ECB's stance and market pricing are more harmonious. Don't you hear the harmony? The harmony and the price movements, the risk on, everyone has got butterflies, right? All right, let's move on here. Hikes we have seen during the past year, and after June meeting, we'll find it challenging for the markets to price more than 40. Really, markets are finding it challenging to price in more than 40 basis points of additional hiking. That's interesting because, as far as I'm concerned, it's all but said and done that the ECB is telling you we are getting that 50, at least 50 basis points of rate hikes, and then maybe 75. So, see that the market's only pricing in 40. I think that's a little bit of an inkling sign, that you get that recession jinx, which is going to be the headline of that new video. Go ahead and make sure you watch it when it shows up in your inbox. Give it a like, send it around. Do it. But seriously, this is exactly the sort of sentiment that I warn against in that video, that recession jinx. You don't want to get stuck trying to pick up pennies in this risk-on market and get run over by a recession bulldozer, okay? Okay. Last little point here. We continue to expect ECB to hike to 4% by September. Good on you, but risk may be slightly skewed to 3.75 in July, as the burden of proof has been reserved. We expect ECB to guide for further tightening, although providing a non-committal statement as they stay data dependent. Okay, that makes sense. Now, the last part of Danske Bank's outlook is this little butte. Just straight up talks about euro-dollar. We make no changes to our forecast and expect the Fed to maintain rates at current levels for the remainder of the year. A pause could pose near-term upside risks for euro-dollar, but we still maintain a bearish view on the cross towards the second half. That's exactly what I say in my macro plan outlook, except just a spoiler here, I anticipate. Hey, Leon, nice to see you in the chat. This is a spoiler for that macro plan video. Go watch it. It's got a lot of good stuff in it, but one of the things that it's got in it is that I'm 50-50. I got one foot in Fed's gonna hike 25, and then I got another foot in Fed's gonna skip and do a hawkish speech from Powell. I do not anticipate the Fed to pause. Not at all. I would be very surprised if the Fed said, hey, we're going to pause and anticipate no more rate hikes going forward. I would absolutely not anticipate that, especially considering how PMI services came out, and they came out worse than expected. And you know what? That means I'm not going to anticipate that the US CPI that comes out on June 13th, just the day ahead of the FOMC meeting, is going to be any better. And that's going to be the big thing next week, because that one economic indicator is going to help determine exactly how the Federal Reserve is going to put things tonally. If they're going to be doing a skip, if they're going to be doing a pause, or if right off the bat on the rate decision you get that 50 or not 50. No one's talking about 50. Don't let me give you a heart attack now. We're not doing 50. That 25 basis point rate hike. Hey, nice to see you again too, Leon. Alrighty. Now that I've done my little bit of macro stuff for like the first 10 minutes here, right? Now I know anyone who's still around listening to me looking at these charts are the good fans here. So let's get into some of these charts. So you can see here, I have time-stamped 2023 June on the 3rd of June. I went ahead and I put in these arrows here. These arrows were my forecast for the week ahead on euro dollar. And every single Saturday for the trading group, I do outlooks for every single dollar pair, for every single yen pair, for equities, for commodities, and for the dollar index, and for bonds, and for crypto. I'll go and do every single chart that's out. Hey, James, you're in here too. Whoa. Alrighty, looks like, oh man, everyone's in here. I'm so glad you guys are here. It makes me super happy to see you all here so early in the morning. Or actually, some of you I know it's pretty late at night for some of you guys. You guys are pretty dedicated to view me. Some of you are like, again, Avilia's in Greece. Oh my god. So, yeah. Real quick here. Thank you guys for watching. Just gotta put that in there. Thank you guys. It means a lot. Alrighty, let's get into the chartios. You can have your Cheerios this morning and your coffee this morning with your Joe Boss chartios. Let's get a little silly. Alright, flat interpretation here. I'm going to walk back and show you exactly what I was thinking. Okay. So you see this histogram, this whole distribution here? So this is trying to tell me where the top for the week, this specific week, is going to come in at. Now, I could turn on the pivot probabilities for next week, but that's for people who are in the trading group and have this indicator. If you want to get this indicator and all my other indicators included, and get into the trading group so you can get one-on-ones with me directly, just pay me. Join, the link's in the description. Join the WAP group. It comes with all the indicators, one-on-ones, all the trading group stuff. We're going to have some fun there. And we're going to do some excellent trade plans, and I'll show you how to use this stuff in these daily plan streams and one-on-one. But though I'm actually going to make this announcement here, there's not just going to be the Saturday trade plan for just people in the trading group anymore. There's going to be two. There's going to be one on Wednesday next week, and there's going to be one on Saturday. So there's going to be a week ahead just exclusively for the trading group, and then there's going to be a midweek update for planning how we're going to trade into the end of the week. Just for the trading group. So now more than ever, if you wanted to get in, now's the time to get in. You're going to get a whole lot of value for it. Now, just looking at these odds, it's like, I think 86% of the time, at least, a little more, like 86.3% of the time, your top for the week occurs above this R0.5 weekly pivot point. The way we come to that number is real simple. You just add up every single one of these percentages, and that's it. 86% of your tops for this week occur above that R0.5. Who knew? You could just do simple addition and come down to a probability, right? But in all seriousness, what we're actually interested in is where most of the probabilities lie, right? So just because 86% of the probabilities lie above this R1 pivot or this R0.5 pivot, well, that could be certainly useful in saying, hey, 86% of the time you will at least go past that pivot point, right? That can be an incredibly useful statement for your trade plan. Like, hey, I should probably anticipate sometime this week, unless we have an incredibly bearish week, that the top for the week is somewhere above this R0.5 pivot. Now, if I turn on the price action, notice how this entire week went by and we didn't cross that pivot. So either this was going to be a super bearish week and we didn't go past that pivot, or it's getting delayed till the end of the week. And you know what? Why did I make this trade plan like this? Because we had to go from negative, bad yield spreads that were weighing down on the euro and then transition into positive yield spreads. So my expectation, neutral. My baseline expectation was, okay, we'll go ahead and transition into a low, rebound, maybe the yield spreads get positive again. And then from there, you can go ahead and have this neat little long. And not only that, but earlier this week I was doing some Eurodollar long trades that I had been forecasting. Man, oh man, were some of these Eurodollar trades a perfectly timed because of these daily range probabilities. And I don't know if I can get them to load exactamundo, but let me go ahead and load a specific kind of range probability here. But man, what a hit. What a hit. Exactly as planned. Exactly as we planned the profit, guys. Exactly as we planned. Let's see here. Oh wow, more than 87%, 88% of the time, the close for the week is below the R1 weekly pivot. I think we'll end up closing most likely below the R1 pivot, don't you think? Now, these yield spreads are definitely increasing at this point in time, right? I don't know how much further they're going to end up going. Personally, I think that the yield spreads will continue to increase going just into Monday. Just into Monday. And here's why. The day before the US CPI reading is Tuesday. US CPI comes out on the Wednesday. So I think in the 48 hours, 36 hours before US CPI comes out, markets will start to go sideways. And then once US CPI comes out, everything's going to get volatile as all hell. All right, let's go ahead, and we got some charts to look at. Thank you guys for sending me some charts to look at. I absolutely appreciate it. Now we can hop off Eurodollar. And also, if you watched my daily streams, you'll know I said, hey, this is not the best time to go long. I need some more information. And this is not the best time to go short, but the neutral trade plan are these little arrows right here. And was I right? Or was I right? Did we plan the profit? I think we definitely did. Or we at least planned to risk manage ourselves. So at least plan to risk manage, and then plan, and make sure you have your plans to profit. All right, pound dollar. Poundy dollar. Oh, wow, we got some trade research here. Let's see. If I glance at this and speed read this real quick, is there anything interesting in here? Oh, I can just read the summary. The Bank of England admits errors and forecasting problems, but rate hike expectations are excessive. The Great British Pound gains, but downside risks. What are the downside risks? With UK yields set to ease as the Bank of England underdelivers current expectations, the Great British Pound could weaken. Great British Pound weakness could be evident against the euro. All right. Thank God for trade research. That was actually incredibly helpful and convenient. Thank you, MUFG. I think I tabbed off there real quick. Alrighty, let's see. What did the pivot probabilities have for us today on this pair? Oh, those are monthly pivot probabilities. We wanted weekly. And look at that yield spread getting super, super positive. Oh man, it's almost like the pivot probabilities were giving you the exact same trade plan on euro dollar, on pound dollar. Oh man, it's almost like these it's almost like these probabilities were telling you exactly the same thing, right? You know, it's almost like they were telling you, oh, 86% of the time you actually hit these targets. It's almost like that's working like clockwork, eh? Well, thank you, everybody. Thank you guys for joining the trading group and getting these indicators and using them. Doing your own trade plans too. Oh man, yeah. Yo. Good stuff. All right, so when it comes down to this week, it's exactly the same thing with pound dollar. Do we top out here for the week? How about this? I'm going to pull up the range probabilities, and I'm going to change this so I can look at the weekly highs for the range probabilities. Oh, Okie doke. Oh man, it's gonna be kind of hard. Yeah, roughly 70-ish% of the time, 75% of the time, your top for the week is in. Right now. But the yield spreads are getting so much more positive. I'd be on the careful side, right? They just, actually, you know what? They were super positive back here, and now they're getting super mixed. What's going on? So when your yield spread looks kind of funky, wow, this yield has been super positive the entire time. I think we got to use a slightly different setting for our interpretations of these colors. Let's just use the rate of change setting. Let's see here. Okay, that's a little harder to read, right? Because you can see that the colors are a lot more muted. But this is exclusively looking at the change in the yield spreads, not just looking at the absolute total value of the yield spread plus or minus some change. This is looking at just the change. So if you have a tiny little change, positive, it'll be a little bit green. And you have a little tiny red change, it'll be a tiny bit red. So everything kind of looks a bit of a shade of pale, right? Everything looks like a bit of a shade of pale. Now, this looks like yield spreads are actually getting worse. They're declining going into the last 5 trading days. So I would be careful, right? I'd listen to that MUFG outlook saying, hey, Bank of England rate hikes could be underwhelming, right? And if the Bank of England rate hikes are underwhelming, then these yield spreads are going to take control and the United States is going to steamroll this pound dollar. Let's go on to the next pair here. We got pound CAD. That's going to be an interesting one because CAD's been on a rip, roar, and a tear here. And let's see. Oh, whoa. Yield spreads are quite negative on this big green candle here. Could be running into a bit of resistance. I could go ahead and mark that up on my chart, actually. Okie doke. So let's go ahead and, I don't know, maybe I think it's probably going to clear that. In my opinion, I think it's going to clear that. Let's see, how much higher could it go? Oh, it's definitely got room to go higher. It's definitely got room to go higher, I think. Let's go ahead and look at the pivot probabilities. No, not that one. We want this one. Yeah, this is actually one chart where you still have room to run for the rest of the week. You still have some probabilities in your favor to run higher for the rest of the week. So note how below this, here's how I do the math real quick in my head. You know, I like to do my math fast and easy, right? So here's the weekly central pivot level, right? You guys can see that. I can make the chart a little more zoomed in so then you can see. So here's the weekly central pivot level at 167.8. 167.8. Below that, I have the pivot probability highs. So it's telling me where do the highs typically occur for the week. And this is saying 10%, 10.53% of the time, the top for the week, this specific week, has occurred between S0.5 and the weekly central pivot 10.53% of the time. So that implies, so if you do 100% of your probabilities minus the one probability you don't want, right? That leaves you with the rest of your odds above the central pivot. Or if you just, in this indicator, if you just want to know your probabilities above and below the central pivot, just go to the very top up here. A little cheat code, right? A little cheat code. So if you just want to know your odds above and below a central pivot, you can go up here or all the way down here. It tells you how many of your odds, whatever odds you're using, are above or below the central pivot. So here it says 89.47% of our tops for the week, or very close to 90% of the time, your top for the week comes in above the central pivot, which, I don't know, do you guys think it's reasonable? we go above this weekly central pivot. Now, one thing I gotta say is, okay, it's 40 pips conservative to get there. Maybe if you hit our 0.5, you get 77. Maybe if you're really lucky, you hit 100. But then these yield spreads are also on the negative side. I'd be on the cautious side here. Do you guys think that this actually would be a reasonable trade plan? Because in all seriousness, how many of you guys even get good leverage on this pair? Cross pairs for many brokers do not give you any decent leverage, or they will charge you out the nose for swap to carry those trades day to day, right? Do you guys actually get any decent leverage or any decent carry when you're trading cross pairs like this, right? Because I don't get crap on Oanda. I don't get crap. They used to give me 50x leverage on the yen pairs, and I was so freaking happy. I was doing so well. And then they took that away from me. They sent me back to the 20x leverage. I'm like, Oanda, why? Why you take away the leverage? Why? Why? Where'd my leverage go, Oanda? Why? But you know what? Dollar pairs still got 50x leverage, and there's other pairs that'll still give me dollar per pip leverage. That's all I need. That's all I need. Sometimes asking for too much leverage is asking for a lot of problems. Too much leverage can give you too many problems sometimes, guys. Alrighty, we got any more charts? I saw NASDAQ. Princely, yeah, bought NASDAQ at 14,268. All right. And Q futures 19, well, not 19, sorry. 14,268. 14,268. Wow, so you got in so freaking close. Oh, you probably bought that wick, did you? You probably bought that bottom wick, did you? Oh, man. Good stuff. Let's see here. Let's go ahead and bring up the probability pivot. The pivot probability is low. Princely, were you using the indicator? Did you just buy the probability weighted pivot low, Princely? I mean, I gotta admit, sometimes that's exactly what I do. I just do exactly that. Now, I'd put my stop loss at this S1.5 level because guess what? Once you cross that S1.5 level, the next most likely area you're going to end up is down here below 14,100, right? So below that S1.5, it would have been a really good stop to prevent you from holding on to any longs going down there, or putting a sell stop to take on a short position at once you cross that S1.5 pivot, anticipating a move down for effectively, well, it could be 100 to 200 points on the NASDAQ. You could have planned to profit there. Man. Princely, did you just use the indicator? Did you just use the probability weighted pivot? Did you just call the damn low with the indicator, man? You sneaky man. I mean, it's at times like these that I wish I was way more into trading equities, especially the indices, a lot more aggressively, because these indicators work everywhere. They work everywhere. They work on the bonds, they work on the equities. If you want them and access to my trading group and all my other indicators, links to it in the description. $100 a month, cheaper than most other trading groups, cheaper than most other products. Alrighty. So, this is fantastic. I don't know. Should I end the stream here? It's been 30 minutes. Should I just end the stream here? Or do you guys got more charts for me? Come on, you want to keep the show going? Give me more stuff to look at, because I think Princely had something going on there. Princely, you dirty devil, man. You lucked out. Hi, Joe, says Lewis. How are you, my friend? Love the streaming, brother. I appreciate it. In a good mood this morning. In a good mood this morning. Got everything set up with the macro plan video that should be publishing any minute now. When this stream is done, please go watch it, give it a like, share it around. And you'll notice I'm in a much chiller mood. I talk a lot slower, like this, with gaps between every word that I say. And I'm like, oh my God, I gotta stop recording at midnight and 1 a.m. because it's causing me to just put all these gaps in my words and whatnot, and it's getting in my mojo, and it's stopping me from thinking so cohesively. So you know what? Once all that stuff comes out, I'm going to start recording more so in the mornings and in the afternoons, and less so at night, because man, that is wrecking my mojo. It's wrecking my speed. It's wrecking my rhythm. So let's go ahead and keep on going. I love the consistency. Thank you very much, Princely. Thank you very much. And yeah, there's the pivot charts for the NASDAQ. Man, do I wish I took Princely's trade, man. Caught the low for the week. Caught the low for the week, man. Oh, man. Now let's see where you're likely to end the week. How about that? Let's look at our probability, our pivot probability closes. And our probability weighted pivot close for the week is right here where we're currently priced at. I mean, another reason you could have assumed for taking the trade is that most of your closes are above this S1 pivot. That's one more thing that you can do. I don't know. I think these odds look kind of flat. They don't look totally uniform. They kind of look a bit jagged, but notice how above here and below here it goes 50-50. So 50% of your closes are above the weekly central pivot, and 50% of your closes are below the weekly central pivot, and they're all sort of evenly distributed. I think we're better off just trying to buy that damn low, right? Just trying to buy that damn low. Oh man, let's check out what the probability weighted, not the probability weighted pivot, but the range probability said about the low for this week on the NASDAQ. Ooh. Yeah, it was telling you that this was tail risk. This was all tail risk. Once you, I mean, 92% of the time your low is in for the week right here at this price of 14,235. But once you start moving past this 14,337 level, once you've crossed this 80% probability threshold, you're starting to deal with more tail risks, because that remaining 20% is spread out between all these lows, going down 1,000, 1,500 points on the NASDAQ. Not fantastic. Now, that's not to say that this indicator is forecasting that we will go down. It's just telling you the probability of that occurring and giving you threshold levels of each probability. That's where pivot probabilities can come in handy, right? It can tell you, hey, for this specific week of the year, this is what you got to be worried about for idiosyncratic risks on this asset for this particular week. This is the range you got to be worried about. But if you just want a general risk model, a general risk probability model, this is what you use. And believe it or not, this is actually pretty tight. Pretty tight for day-to-day trade plans like I've been demoing out. And tomorrow, subscribe and like this video. Subscribe, like, put on notifications, because tomorrow there will be another daily plan stream here on Plan the Profit. My name's been Joe Boss. I've been your boss. And I'll see you guys in a bit.